Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Hope everyone is doing well. What a week it's been. A lot of chop, a lot of indecision. We're here we are at one of the trickiest days of each and every month, and that is options expiration. For me, options expiration is really summarized in a couple of things. Number one, it's about size, it's about volume. If you're looking for where those magnets on the options chain are, look for where the open interest is very active, very thick on both the put and call side. Those are things I look for. There's a certain magnetism to things like that. I also realize that, when we look back on our trading, and if you've never done this before, I use a service called TradesViz. That's something I've been using pretty heavily the last 10, 12 months now. And I know we all tend to look at our net liquidating value. That's not really something I am as concerned about as I am what day do I enter trades? What time do I enter trades? What is the result of certain trades that are entered during a certain day and time? And for day trading, that's why my favorite window for day trading, it starts at 9:30 and ends at 10:35. That's how I know that my best windows are 7 to 9, 9:30 to 10:35, and 1:35 to 3:05, right? I get that granular about what time are my best trades being entered. The same thing can apply to the day of the week, not just any week, but also specific days of the month, like options expiration, like non-farm payroll, things of that nature. And then that maps then to end of month, end of quarter, stuff like that. And, not everyone's going to have the same results. Not everyone's going to have that same window. So it makes so much sense to study your trades and your results. And for me, options expiration is one of a handful of days that I know that there's shenanigans, right? The shenanigan meter is pretty much broken and pinned, right? Shenanigans and a lot of that gravitational pull, that tractor beam, if you will, to those thick layers of open interest at certain strikes. Okay, that being said, that's what we're dealing with here this morning. And I just want to be realistic about, hey, this isn't any Friday. And I frankly don't love Fridays to begin with, right? Monday through Thursday, fantastic. If there's a day off, or if there's a day that, for example, in the futures room and in the sector secrets mastery, we do a lot of Q&A. We do a lot of recap on the week. We do a lot of, okay, what did we do well? What can we do to prepare for next week? We do a lot of ask me anything. That's the last hour of the day. And that has really prevented me from making really, essentially dumb mistakes at the end of a week. All right. That being said, as always, if you have any questions, feel free to type them in. What symbols are you looking at? Let me know what time frame you're looking at. Maybe even what, in terms of symbols, time frame, and maybe if you've got a position or not, or are looking for a position. The more detail I have, the better I can help you out. So go ahead and get those symbols in there. Phone lines are open for your requests. All right, so kicking it off, let's go ahead and jump into the economic calendar for a moment. Pretty quiet April 21. A lot of data coming out of Europe. We've got these flash services and flash manufacturing releases. We have manufacturing PMI, flash services PMI coming out of the US in about 41 minutes. So that quirky 9:45 hot zone, heads up for that, my day traders. It's an unusual time. Usually we have 8:30 release. Usually we have 10 a.m. release, but we have this quirky 9:45 today, right smack dab in the middle of our clearing range. And then FOMC member Cook, 4:35. I mean, frankly, we're going to be checked out by then, and that's going to impact possibly the Sunday open and maybe the Monday action. All right, so first up from our training room. All right, let's get to it. Question is about Amazon. All right, so let's jump on over. I'm going to start with the trading view charts, and we'll jump on over here. Take a look at Amazon. I have calls. All right, Lincoln Park. What do we have here? So if I'm looking at the daily time frame of Amazon, a couple things to note, really simple things to note. And these are basic at a glance, automated things that I can use within, 10, 15 seconds. Quite literally, I know what I'm dealing with. We have Amazon below the 200 propulsion. What does that mean? It's in the bearish hemisphere. Not that I can't buy it, but I know I've got this resistance overhead. All right. The next thing that I'm dealing with here on this particular chart is pretty nice bullish momentum since the middle of March. So I've got a mid-March bullish momentum that's formed kind of nicely. All right, cool. I still have a yellow or sideways trend. So this is still very much an environment where I would use, say, a slow stochastic to measure what is overbought and what is oversold. That's going to be my oscillator telling me where the support and resistance are. If I want to be a buyer, which I don't have a problem with, that zone's going to really start around this point of control. Actually, let's make sure this is the 2023 point of control. And survey says, no, a little bit higher. So what I'd like to frankly do is focus on a zone, maybe aggressively at about 102.20, but a little bit more conservatively around 100.7 to about 99. So about $1.70 range on the DPMR for a buy. Do I mind the buy? Not at all. In fact, I'd rather prefer it. However, I know that the upper end of the daily price movement range at yellow zone and the 200 are going to likely be where the resistance is going to really stack up because we're still below that 200. So thank you so much. If you've got calls, again, what's really important is where are the calls bought from? So I do want to mention this. And again, not knowing where you bought, let me just tell you what I usually recommend to my traders. As close as we can get to support, the better. As close as we can get to layers of support, again, the better. Whether that be recent lows, whether that be a volume profile level, the closer we can be to a buy off support, which means those calls are most often going to be bought with bearish momentum. That's probably the biggest adjustment traders in my mastery make, which is, oh, Rog, we're not buying calls on up days. No, that's nearly synonymous with overpaying for an option. If you feel that the overall path of least resistance is higher, it's like the old saying goes, Wall Street's the one place people throw a sale and nobody comes. And ultimately, if we can take advantage of movement lower within an environment that we think overall is going to follow through, say in the next 2 to 10 days, why not wait for it to come on sale, right? Why not wait for that blue light special, as I like to think about it? All right. Thank you so much for the question. Next up from our YouTube. Now, we're broadcasting on Facebook, YouTube, my Twitter. So again, thanks for everyone for tuning in, regardless of where you're coming in from. We've got a question about the SPY. All right, great question. And I actually got a question also yesterday in Charts and Coffee. Avi, are you out there? So Avi had a question, and Trish made sure I addressed it. She said, this is a good question, Rog. So I'm just going to paraphrase the question. It was about the S&P, and it was also, let's type in the symbol. It's about the S&P, and it was about, can I take advantage of, one, zero-dated options, and two, SPY or SPX. So let's tackle both of those things. So again, a zero-dated option is simply an option that has very little time to expire, and it's going to expire that day, right? That's it. Let's not put a strategy behind simply the theta decay, the time decay, or the fact that there's no time to expiration, essentially, right? I think a lot of traders look at zero-DTE and think, oh, that in itself is a strategy. It's not. It's just a reality about probably a lower cost option, and also the fact that there is a very finite, right? You are right on top of that expiration. Okay. If I'm going to trade the S&P, SPX, SPY, any variation of the S&P, I'm going to look at the most complete view that there is of the S&P, and that is the ES futures. That is a more nearly 24-hour view of what's happening with the S&P 500. Once I get a read of what's happening here, and if we're talking zero-dated options, that's really a day trading mindset, right? So let's look at the 5-minute chart. So I'm going to look at the 5-minute chart of the ES futures, and I'm going to find a setup there. When that setup triggers, meaning the technical criteria, an indicator criteria, a price criteria is met, and I'm getting long, short, whatnot. At that point, in lieu of trading the S&P futures, I can choose to buy a put or call in the SPX. I can choose to buy a put or call in the SPY. I can choose to sell a put or call in the SPX or SPY. I can be a debit trader or I can be a credit trader, but everything's really contingent on what is the clarity and what is the setup on the ES futures. Remember, gang, rather than that 9:30 to 4 world, we're talking about nearly 24 hours, a much more complete view of what's happening. So is zero-dated options something we get into? Absolutely, but mainly because it reduces the cost of being a long call or long put day trader on the ES. And so, yes, zero-dated options are something we can utilize because it brings a certain affordability to day trading an option, but I won't make the zero DTE the big thing. Right now, gang, it's very much a buzzy, trendy thing. Let's trade the SPX in 0 days to expiration. Unless there's a setup rooted in that, please, gang, don't get caught up in the hype. All right. I know it's very exciting to have zero, an option expiring every day, but there must be an underlying setup. Please, please, please listen to me now. Believe me later. So thank you, Avi. And then as far as the ES goes, what can we do? Same thing. Gandhi, it depends on whether I want to be an hourly time frame trader or a daily time frame trader. I don't have anything imminent on the ES. Therefore, at the moment, I don't have anything imminent on the SPY or SPX. Now, for day trading, or if we're short-term swing trading, that would be day trading the 5-minute time frame, short-term swing trading the 1 hour. Let's let the opening range establish itself. Let's see how the open begins, and then we can see what setups we get. All right. But generally speaking, in the most general of ways, I am mildly bullish on the open. I am mildly bullish on the open. We're starting to get a little bit of an uptrend forming on the 5-minute chart, and we are trading above the line in the sand. The previous session closed on the daily. All right, good stuff. Let's see what else we have here. And let's see, would I trade T? Would I trade T for a call? All right, let's see what we've got here. I'm going to keep the 1 hour open and the daily. Okay, so why the interest in T? Let's talk about earnings for a moment. And if you haven't already, gang, and this is actually a great question, Richard, great question. If you head on over to Countdown Trader, gang, it's a free website. It's where Trish puts a lot of the things that I'm doing that are relative to what's happening in the market right now. Countdowntrader.com. I've got my 642 earnings window strategy. And that explains that I start looking for earnings opportunities 6 to 4 weeks before the actual hot zone. Hot zone is just a term I created for myself about 20 years ago to describe high impact, high volatility events that are scheduled, right? So an earnings release would be such a thing. When I'm dealing with this, I'm already out no less than about 24 to 48 hours before all these shenanigans, right? So I don't want to be in this very binary, we're very right or very wrong scenario where that comes with earnings. However, I also want to think about giving this particular volatility about 1 to 2 days, 24 to 48 hours for the dust to settle, gang. So no, I'm not going to do anything with T today because one, yeah, that's a candle of unusual size, right? There is some major psychology behind that. And I'm not going to presume it's going to catch a bid today. And I'm not going to presume we're going to continue to sell off. I'm going to give it some time. I'm going to navigate around it. Remember that it's going to affect the IYZ and probably also the XLC. So where does this volatility land, right? At the boat and tide level, which tides does the volatility land? And then give it until Monday or Tuesday. And that's why, right? That's what I'm looking at there. All right. Next up is from our free training room. Let's see. Bear with me. Amazon. Yep, we covered Amazon. Covered T. J Traders mentioning dividend yield on T is above 6%. But remember, dividend is like carry in a Forex trade, right? It's gravy. It's never the reason to be in the market. Again, I don't mind to buy tea for a longer term time horizon with the dividends. I love dividend yielding stocks. I've got a portfolio of things like that. However, I still want to be smart about the buy. And I look at carry trade. To me, dividend is like a carry trade in Forex. What's the interest that it's giving me? That's the gravy, but is there a legit trade behind it? So yeah, good to know, Jay Trader. And I'm sure a lot of folks are thinking the same thing. Hey, can we take advantage of this, of tea going on sale, right? Tea going on sale. So to me, all I'm going to say is, yeah, that's a good reason to focus on tea. Let's just wait for a really good buy. It could even be an inside day on Monday, right? We can be that aggressive with it. All right, next up is Tesla. Same narrative, gang. Think about, and if you haven't checked out that 642 earnings window, it details very much the timing that I look at these names. So again, I'm going to give this about 24 to 48 hours and let it settle down. So I'm not stepping on, I'm not stepping into the mosh pit, right? I don't need to come out with bruises and black eyes. Let the mosh pit settle down, and then we'll take advantage of whatever setup. Again, inside candle, minor lows are very, very powerful. Tesla is still neutral, so it's certainly a buyable scenario. Let's just wait for a setup, right? The volatility in and of itself cannot be the setup, right? Okay, next up is KRE. Absolutely, yes. In the upcoming this week in the market, our TWM issue, which is going to be released on Monday morning, gang. First thing Monday, you'll have this. One of the things that I'm going to look at is where are we in terms of that credit scenario with this post-regional bank crisis? Is it still really a crisis? What's the data from the Federal Reserve really saying? I'm going to dive into that in this week's newsletter. All right. And oh, by the way, if you have not already just wrote down or sort of either click the notify me thing, if you head on over to the Simpler Trading YouTube channel, which I'm sure many of you are on right now, and you head on over to the live, you'll see, or even I think it might be on home, you'll see that next Thursday at 4 p.m., I'm doing a guide to how I look at the week. How do I prepare for the week? So if you haven't checked that out, you can do that over at the Simpler Trading YouTube channel. So Raghee's Guide to a Weekly Trading Plan, going live 4 p.m. next Thursday, all right, on the 27th. So when it comes to KRE, that's going to be a little bit bigger picture, Christian. That's why I bring that up. If I'm looking at KRE right now, the regional bank ETF, by the way, which is quite heavily weighted in the Russell, which is why the Russell's spinning its wheels, I would still be very cautious with this. XLF, Christian, is going to be a better place to look. XLF might be giving us a much better view at a recovery because big banks are not in the same boat as regional banks. I would, at minimum, wait for the structure of KRE to go neutral, right? Let's at least wait for our moving averages to indicate that we're not in a downtrend, that we've segued to a neutral. Heck, let's even wait for the momentum to go neutral. Otherwise, this is straight up, as the saying goes, catch the knife. I like all my digits, right? Let's wait for it to go a little neutral. We are finding a range, beautiful Darvis range here, but let's wait for it to get a little bit more neutral, maybe even just neutral Momo before we start to get into buying calls or buying KRE. All right. Flows might be another really good thing to look at. And I'll probably dive into looking at some flows. Are we seeing inflows in KRE or not? Is the money finding its way in? And then also, where is the volume? Yeah, right? Where is our point of control? If you're looking for some kind of price for this chart to hang on to, that point of control for this year is at about $43.50. So that might be another really cool thing to keep an eye on. All right. So that is, gang, that's our show. Boy, that 20 minutes flies by. Thank you, as always, gang, for being here. We're broadcasting across 5 channels now. So get those questions in early. I just go right down the line. Thank you so much. I'll see you Sunday. Gang, we've got our This Week in the Market live show, 30-minute show, 6 p.m. on Sunday, preparing for the new week. So I'll see you on Sunday, same time, Not same time, same channels, 6 p.m. on Sunday. Be good to each other, gang. I'll talk with you soon.